Well, as expected, the Bank of Canada made its second interest rate cut of the year since they started increasing rates 2 years ago. As expected, the Bank of Canada today dropped its rate from 4.75 down to 4.5. This is the second rate drops in this period of easing after the interest rate increases of the previous 2 years. Really, what does this mean to you? If you're in a fixed rate mortgage, nothing really. If you're coming up for mortgage renewal, it does mean that we are seeing downward movement in interest rates. If you have a variable rate mortgage or are considering getting a variable rate mortgage right now, for every $100,000 that you borrow, assuming a 25-year amortization, you're looking at about $15 per month in additional payment drop over and above the payment drop that happened after the June interest rate announcement. The cumulative impact on both the June and now this July interest rate cut on a variable rate mortgage, typical amount, say $500,000. Over a 25-year mortgage, you're looking at about almost $150 per month in payment relief. RBC earlier this month did say, and many others agree, that we're going to see after today another 1.5% interest rate cut. So we can continue to see likely more of these $150 or so per month decreases, or an additional almost $450 a month between now and the end of 2025. Now, for those of you looking to get fixed rate mortgages, in fixed rate mortgages, obviously nothing changes. If you're looking to get a fixed rate mortgage or you're already approved with the fixed rate mortgages, we might see some additional decreases in that rate. But for the most part, the fixed rate mortgage pricing anticipates what's going to happen in the market. And with this interest rate cut being widely anticipated, the interest rates on fixed rate mortgages have already dropped. We're seeing 5-year rates down to 4.65%, 3-year rates around 4.9%, and those have come down recently, and we are still at fairly high rates on both the 1 and the 2-year term. If you're thinking variable, that's probably actually starting to look like it makes a lot more sense. Now, why is the interest rate dropping? Obviously, we know it's been painful for the last couple of years, but we are seeing data both in Canada as well as the United States and international that does support having this interest rate drop, that is exposing pain and weakness in our economy and international economies. As far as Canada's jobs market, for example, there are signs of slack in the labor market. The unemployment rate has risen to a modern high of 6.4%, and the employment growth is slower than the increase in the size of the job seekers market, meaning between people coming out of school, people immigrating into the country, we are seeing the labor force growing at a faster rate than we are seeing new jobs. So it's getting harder and harder to get a job here in Canada. And it's not that much different in the United States. We do have to mirror or very closely monitor the US monetary policy. They have yet to have any interest rate decreases, but there might be one later this month. Most likely, they're going to see their first cut in September. Things that will support the United States having a cut are the US jobless claims. They have gone from 1.4 million people a year ago continuing to have no job, now up to 1.8 million. So those are people filing claims for unemployment insurance. And in addition to that, we're also seeing a reduction in the full-time workforce in the United States. We've seen 1.8 million new jobs, but 1.5 million full-time jobs have been lost, and those 1.8 million new jobs are part-time jobs. So it goes with that saying of, great, there's new jobs. I've got 3 part-time jobs and I still can't afford my rent. As we see more part-time jobs created, sure, that's great for people with no work, but fewer full-time jobs, of course, is going to add further strain on the US economy, and we're seeing a similar story unfold here in Canada. So as we do see these interest rates decrease as a result of weaker economic data, we are going to see affordability improve on mortgages, especially those with variable rate mortgages. We can likely expect some additional or further fixed rate mortgage decreases over time. That is likely going to push the pressure on house prices in Calgary and in Edmonton and around Alberta to go up. We have been seeing a strong housing market in both of our major markets. If you're unsure how this impacts you, if you're thinking of looking to buy a home soon, if you're coming up for mortgage renewal soon, we would love to talk to you. Please reach out to me, reach out to my team, and we can help you navigate this complicated and complex world of always changing mortgage interest rates to try to develop a strategy and a plan that works best for you. Thanks so much for tuning in today, and see you again in 6 weeks.